I stopped counting around 647. That's how many times I checked the same setup before I finally took the trade. Not 600 in total. 647 times on one specific pattern during one single trading session. And what makes this embarrassing is that the setup worked. It did exactly what I expected it to do. The same thing it had done the previous week, and the week before that. But I sat there frozen, refreshing the chart, checking volume, looking at longer time frames I didn't even trade, staring at indicators I'd already removed months ago because they added nothing. The problem wasn't the setup. It was that I'd confused preparation with protection. Back in 2008, I watched the market do something I'd never seen before. Not the crash itself. Everyone saw that. I'm talking about what happened to traders around me. The ones who survived weren't the ones with the best system. They weren't the ones who predicted it. They were the ones who could still execute when nothing felt safe anymore. And I started to notice this pattern kept repeating. Different years, different conditions, same result. The traders who could act when things felt uncertain outlasted the ones who waited for certainty that never came. I didn't understand what that meant at the time. I thought it was about confidence or experience or having enough capital to weather the storm. And maybe those things help, but that's not what I kept seeing. What I kept seeing was something quieter, something that showed up in small moments that didn't seem important until later. There was this trader I knew, older guy, traded index futures, very consistent, not flashy. He had this thing he did every morning that seemed completely pointless to me. He'd write down his plan before the market opened. Not complicated, just where he'd look to enter, where he'd exit, what he expected to happen. And then after the close, he'd write what actually happened. That was it. No detailed journal, no performance metrics, just those two things. I asked him once why he bothered. He said it wasn't about the writing. It was about noticing when his plan changed during the session without him deciding to change it. He said most of the time when he lost money, it wasn't because the setup failed. It was because somewhere between writing the plan and closing the trade, he'd started following a different plan he never actually made. That didn't make sense to me back then. I thought execution was simpler than that. You see the setup, you take it, you manage it, you exit. What's complicated about that? What I didn't realize was that between seeing the setup and taking it, something else was happening. Something I couldn't see because I was too close to it. I was running a different process entirely. One I hadn't designed. One that wasn't trying to make me money. It was trying to make me feel safe. And the thing about trying to feel safe in the market is that it looks productive. It looks like preparation. You're checking more data, confirming more conditions, waiting for stronger signals. You're not frozen. You're being thorough. Except thorough doesn't have a finish line. There's always one more thing to check, one more confirmation to wait for. And what you don't notice is that the opportunity is slipping away while you're gathering evidence that it's safe to take it. I had this trade I still think about. Small account at the time, maybe 11,000. I'd been watching this particular index pattern for weeks. Very clean, strong directional move, pullback to a specific level, rejection, continuation. It kept printing the same way, and I knew if it set up again, I was going to take it. It set up on a Tuesday morning. Perfect, exactly like I'd been watching, and I didn't take it. I told myself I needed to see more confirmation. What I actually needed was to feel more certain. And there's a difference between those two things that took me years to understand. The trade worked, moved exactly where I expected. I watched the entire thing happen without me in it. And the frustrating part wasn't that I missed it. The frustrating part was that I knew I was going to miss it while it was happening. I could feel myself looking for reasons not to take it even though nothing about the setup had changed. That's when I started to realize this wasn't a knowledge problem. I understood the setup. I'd seen it work. I had a plan. What I didn't have was a way to execute that plan when executing it felt uncomfortable. And in the market, executing almost always feels uncomfortable. Because if it felt safe and obvious, there'd be no edge left in it. I started paying attention to what happened in those moments right before I was supposed to enter. And what I noticed was that I was asking questions I'd already answered. Is this really the level? Did I confirm the trend properly? What if this time is different? Those aren't real questions. They are delays disguised as diligence. The pattern I'd been missing was this. Every time I hesitated, it wasn't because the setup was unclear. It was because taking the trade meant accepting that I could be wrong. And I'd built this whole process that was supposed to minimize being wrong instead of just managing what happens when I am. There was a stretch where I decided to test something. For 2 weeks, I committed to taking every setup that matched my criteria. No extra confirmation, no waiting for it to feel better. Just if it fits, take it. The rule was simple. If I found myself checking something I'd already checked, that was the signal to enter. Those 2 weeks were some of the most uncomfortable trading I'd ever done. Not because the trades were wild or reckless. They weren't. They were the same setups I'd been watching for months. They were uncomfortable because I was entering before I felt ready. And what I found out was that I was never going to feel ready. Readiness wasn't something that happened before the trade. It was something that came from taking trades before I felt ready. Out of 17 setups during those 2 weeks, 11 worked. 4 hit stops, 2 broke even. The results weren't what mattered. What mattered was that I'd proven to myself that the extra checking wasn't improving anything. It was just making me feel like I was improving something. But knowing that didn't fix it. I still had the impulse to check one more time, to wait for one more candle, to verify something I'd already verified. And this is the part that's hard to explain to someone who hasn't experienced it. You can know intellectually that you're sabotaging yourself and still do it anyway. Because the sabotage doesn't feel like sabotage. It feels like being responsible. I started to notice that the traders who lasted weren't the ones with the best win rate. They weren't the ones who avoided losses. They were the ones who could take a loss on Tuesday and still execute their plan on Wednesday without adding new rules to prevent Tuesday from happening again. That's a completely different skill than finding good setups. There was this moment maybe 4 years ago where I finally saw it clearly. I was in a trade. It was working, moving toward target, and I started thinking about where I'd move my stop. Not because anything had changed, just because it was in profit and I didn't want to give the profit back. So I tightened the stop, got stopped out, watched the trade continue to target without me. I'd done that before, many times, but this time I caught what I was actually doing. I wasn't managing risk. I was managing discomfort. And the discomfort wasn't coming from the trade. It was coming from the possibility that the profit might disappear. So I made a decision that protected me from feeling that discomfort. And that decision cost me the trade. That's when it clicked. The market doesn't care about my discomfort. It's going to do what it does regardless of whether I'm comfortable with it. So every time I make a trading decision based on trying to feel better, I'm optimizing for the wrong thing. I'm not trading the market. I'm trading my emotional state. And once you see that, you start seeing it everywhere. The trader who moves their stop because they can't handle watching the drawdown. The trader who exits early because they are afraid of giving back profit. The trader who skips the setup because last time it didn't work. None of those are trading decisions. They're comfort decisions. The difficult thing is that comfort decisions often feel justified in the moment. You can always find a reason. The setup isn't quite as clean. The market's been choppy. Maybe wait for stronger confirmation. Those sound like legitimate thoughts. But if you trace them back, they're usually just ways of avoiding the discomfort of being in an uncertain position. I'm not saying every trade should be taken without thought. I'm saying there's a difference between analyzing the setup and analyzing your feelings about the setup. And most of the extra checking, extra confirming, extra waiting is the second thing pretending to be the first thing. What changed for me wasn't that I became more confident. I didn't. What changed was that I stopped waiting to feel confident before executing. I started treating the discomfort as information instead of a problem to solve. If I felt uncomfortable entering a valid setup, that meant the setup probably had edge. Because if everyone was comfortable taking it, it wouldn't be there. This applies to exits too. I used to get out of trades the moment they stopped moving in my direction. Not because they hit my stop, not because the setup invalidated, just because they paused, and I'd tell myself I was being smart, taking profit, staying safe. What I was actually doing was making sure I never had to experience the feeling of watching a winning trade turn into a losing trade. But that feeling, that's just part of trading. You can't remove it without removing the opportunity. The trades that move straight to target without any drawdown are not the norm. The norm is getting in, watching it go against you slightly, wondering if you're wrong, then watching it eventually work out. Or not. But if you exit every time it makes you wonder, you'll never be in the trades that work out after making you wonder. There's this thing that happens when you start to accept discomfort as normal. You stop creating extra rules. You stop adding filters. You stop looking for ways to make the setup feel more certain. You just take the trade, manage it according to plan, and let it resolve. And what's strange is that trading becomes simpler when you stop trying to make it comfortable. I still have the impulse to check one more time, to verify something I already know, to wait for additional confirmation. But now I recognize it for what it is. It's not analysis, it's avoidance. And when I catch myself doing it, that's usually the signal that I should probably take the trade. The traders who don't make it, a lot of them have good systems. They understand structure. They can read a chart. What they can't do is execute when execution feels premature. And the market rewards execution, not preparation. You can prepare perfectly and still miss everything if you're not willing to act before you feel ready. I think about that older trader sometimes, the one who wrote down his plan. I finally understood what he was doing. He wasn't trying to predict what would happen. He was creating a reference point so he could notice when he stopped following his own logic. Because the logic doesn't usually fail. What fails is your ability to follow the logic when following it feels wrong. Most of the lessons in trading aren't complicated. They're just uncomfortable. And the reason they keep needing to be relearned is because knowing them doesn't make them comfortable. You can know that you should take the setup and still find yourself looking for reasons not to. You can know that you should follow your plan and still change it mid-trade. Knowing doesn't override the discomfort. You just have to act anyway. If this feels familiar, you probably understand what this channel is actually about. It's not about finding better setups. It's about what happens in the space between seeing the setup and taking it. That's where most of trading actually occurs. And it's the part almost nobody talks about because it doesn't sound strategic. It just sounds like you can't handle your emotions. But handling your emotions isn't the goal. Trading in spite of them is. I still count sometimes, not 600 times anymore, but I still notice the impulse. The difference now is I know what it means. It means the trade probably has edge. Because if it felt safe, it probably wouldn't be there. Before I end, I want to be transparent. I'm setting up a small crypto cloud mining operation as a real business experiment. I'm looking to raise around $2,000 to build the infrastructure. This is high risk, no guarantees, no hype. If you understand crypto, understand risk, and want to discuss it seriously, my contact email is in the description. If not, feel free to ignore this and just take the video for what it is.